Hey everybody, it's Wayne here to give you a weekly wheel update. Every week I push out a video in which I talk about all of the trades that I conducted related to the wheel strategy. Now last week I talked about three particular stocks that I was running the wheel on: Amazon, SoFi, as well as Celsius. Now Amazon, I'm done. Until the share price of Amazon drops down, I am not going to be selling any more cash secured puts against Amazon. Celsius, I had 100 shares in which I had paid $93 per, so my cost basis in total was $9,300. I am convinced that I would be able to get in at a lower price. And so you can see here on line item 17 that's highlighted, on the 20th of April, I sold a covered call, meaning I am agreeing to sell my 100 shares to somebody on the other end of that contract if Celsius were to reach the strike price of $93 or more. And as it turns out, it did. So the $75 premium that I was paid, I did not have to buy to close early because essentially that contract expired in which I was assigned, meaning those 100 shares were taken from me and they were given to the person on the other end of the contract. Now what was nice is up until that point, I earned a total of $1,775. So now my shares are called away. What is it I'm going to do with my $9,300 collateral? Well, you've heard me mention it before. I do like to sell cash secured puts and calls against Celsius. So I am essentially starting back at the very beginning of the wheel, which is selling a cash secured put. Once again, I am receiving premium to enter a contract to buy 100 shares of the underlier. Now I need to have the cash collateral to do that. And again, the whole purpose of allowing my shares to be called away last week was because I was convinced that Celsius may drop down lower than the original $93 share price that I had paid. I'm hoping that Celsius will fall back into the $80 price range. So on May 2nd, I wrote a cash secured put on Celsius, and I entered a contract where I am agreeing to buy 100 shares if the share price of Celsius drops down to $88. Now I'm laughing here because go ahead and take a look here. For the week, Celsius did rather good. In fact, it saw nearly an 8.5% increase for the week. For the month, they are also up, I believe, nearly 20%. And for the last 3 months, they are up 9%. So if you just look at this chart, it does not look like maybe parting ways with my 100 shares at $93 was the best idea. But that's okay, because if we look in the last 3 months, even though they're up 9%, at one point, right, Celsius was down as low as $81.64. You're seeing a lot of up and down activity, hence why Celsius has some great premiums, right? They don't have this very steady, slow, right? No, it's all over the map, as you can see here with the chart. So I decided to sell a cash secured put. I chose a strike price of $88. And what that means is if Celsius dips below or to $88, then I am going to be forced to buy 100 shares, hence my collateral is waiting in the wings. And in doing so, I was paid $215. So take a look here in the upper right-hand corner, just in premiums, I have earned nearly $2,000. Not bad, considering as of right now, I own no shares of Celsius regarding this overall wheel strategy, and yet I just got paid $215. And if we look at the chart, right, based on this, I don't know that Celsius is going to go down to $88. But one of the reasons I was able to earn so much in the form of premium is because the week that this contract expires, it is also going to be the week of earnings. And we also have to point out, anytime that you are writing a covered call or a cash secured put and it expires the week of earnings for that underlier, you're going to see elevated premiums. You're going to see elevated implied volatility. Everybody's sort of betting on what they think the stock is going to do, right? Is it going to go up? Is it going to go down? And so when you have earnings week, one of the things that I love to do is write a cash secured put that expires the same week as earnings. To me, it's a win-win, because if I want to own Celsius, and I do, right, and I want to own Celsius for an $88 per share, then why wouldn't I have somebody pay me to buy a stock that I would otherwise have purchased anyway? And so that's really what a cash secured put can be when you think of it in that terms. So as of for Celsius, I'm going to be on the sidelines until next week. Again, I actually don't think right now, looking at this chart, that Celsius is going to dip. But hey, when earnings comes out and if Celsius does not meet or does not beat, you never know. You could see that share price plummet, and maybe I will be assigned those 100 shares for $88. But if I'm not, here's the beauty about a cash secured put. I'll essentially take all of my premium and I'll essentially do the same thing the following week. Will I earn $215 the following week? No, maybe not. But you guys can see here, if I were to average all of these opening premiums that I was paid, it's an average of $147.65 per transaction. So that means for every transaction that I've conducted, and I've done a total of 17, I've earned nearly $150. Now, the majority of these being covered calls, but nonetheless, I think Celsius is going to continue to be very profitable for me. All right, bear with me now because we have a lot to cover on SoFi, and this doesn't look the cleanest as I would like it to look. And one of the problems is we'll go back to my very, very first purchase of 100 shares. I did not do this via a cash secured put. I decided to buy 100 shares outright. So I spent $5.74 times 100 shares. My cost basis was $574. I did this back here on March 23rd. And ever since then, I wrote covered calls every week with a $6 strike price. Now, the nice thing about the $6 strike price is essentially when I was assigned, meaning that the share price of SoFi went above the $6 strike price, that was okay with me because, yes, those 100 shares were called away from me, but I was able to profit $26 just on the share appreciation. That's not including all of the money that you see highlighted here that I made in weekly premiums. And if you look here, I made a total of $49 up until this week in which my 100 shares were called away. So notice the number here in the upper right hand corner. This is only going to be premium earned. I am not including, right, the share price appreciation. And for these two transactions, it's a total of $45. This $45 is not included. I am only keeping track of premium here in this line item in the upper right hand corner. So these shares were called away from me, it looks like, on April 28th. Now, eventually, I turned right around and I bought another 100 shares. This time, SoFi saw a pretty significant share price decrease in the last week as well as the last month. This kind of goes back here to earnings, right? Going back to, I love writing contracts during the week of earnings. You got to be careful though, because if you buy 100 shares before earnings and you're thinking that the share price is going to shoot up, well, clearly that did not happen. And in fact, if I owned 100 shares on April 28th, well, they were worth $6.24 each. But the reality of the next day after earnings, right, the share price fell down to about $4.85. So I made a decision to buy 100 shares and I paid $4.81 times 100, which means that my cost basis in total was $481. So if we now go here to the next cover call that I wrote, and it's kind of difficult because I also sold some cash secured puts, we're going to go ahead and explain that. But go ahead and take a look here at line item 10. After I purchased 100 shares here on May 2nd, remember my cost basis being $4.81, I turned around on May 2nd and I wrote a covered call on my strike price being $5. And the expiration was just about a few days out. In fact, just 3 days out. Now, writing that contract, I immediately earned $11 in premium. Remember, premium is immediate. It goes right into your brokerage account. You can do whatever you want to do with that cash. And so you'll see normally I would buy to close if it, is $1 or $2, or sometimes, I'll have a threshold like 75% or 85% or 90% profit. But remember, I wrote a covered call in which I'm saying if the share price of SoFi goes above $5, then I agree to, have those 100 shares called away. And guess what? When this contract expired on May 5th, sure enough, right? And if we go back over here to the chart, let's go ahead and see how things turned out. This should show that when the market closed on May 5th, the SoFi share price was clearly above $5, right? It was like $5 and maybe 11 cents, which means even if I'm 1 penny over this $5 strike price, that's it, right? I've agreed to sell those shares at $5, not $5.13, right? This is what the person now owns those 100 shares for that value. I am agreeing to part ways with those 100 shares at this strike price. So that's also the danger of covered calls. You don't get to participate in perhaps all of the upside. In fact, if SoFi had gone to the moon and let's say it went to $10 per share, well, then I'm only going to be able to get, right, what I agreed upon in that contract. But nonetheless, I earned $11 in premium. That was completely mine. But guess what? We have to remember what my original cost basis was. And in this example, I purchased 100 shares for $4.81, meaning when those shares were called away, that's where you see the $19 in share price appreciation. This is not included with the premium. So right now, just on share price appreciation, I've earned $45 in less than 2 months. Not bad. Now I got to make this very clear. I realize, right, that this is not big potatoes, right? $45 in the grand scheme of things. But I also look at, what SoFi is to me. And, it's a $5 stock, right? It doesn't pay a dividend. If these shares are called away, I'm not going to lose sleep. And that's also important to note because I also turned around and I wrote a series of cash secured puts. Not one, not two, but I wrote 3 cash secured puts around the same time in which I chose a $5.50 strike price, which means by May 5th on all 3 of these, if the share price of SoFi reached $5.50 or below, guess what? I am going to be assigned 300 shares. Not at the current share price of $5.13. My cost basis is going to be $5.50 times 300 shares. So I am currently in SoFi, 300 shares. My cost basis should be about $1,600. I'm not sure, guys, why this number is not reflecting the $1,600. That should be my true cost basis. So I can only think maybe because I had that one transaction in which the shares were called away. So I expect this to be updated on Monday, but right now, this actually would show that my cost basis or my average cost is $5.33. That shouldn't be the case. My cost basis should be $5.50 per share for those 300 shares. But nonetheless, even though those 300 shares were assigned to me at what essentially is a loss, take a look at all of the premium that I earned, which is $36. Remember, when you receive premium, whether it's a covered call or a cash secured put, that premium is yours to keep no matter what happens. Now, it may ultimately be less in the form of net value if I buy to close, right? So for line item 5, yeah, I opened a contract for $10, but rather than waiting to expiration, I chose to buy to close early. And you can always do that anywhere in the contract. Obviously, the closer to expiration that you are, the cheaper it's going to be for me to buy to close. The value of me buying to close early means I can immediately open another contract. So if I had waited till, let's say, Friday to allow this contract to expire, then I would have to wait till the following Monday. Versus if I buy to close on Friday, well, technically I can even open up a contract the same day for the following week. So for the most part, and if we go back here to Celsius, I want to say, like with the exception of 2 contracts, every single contract, I always buy to close early. To me, that's always what I do. And even with the majority of covered calls that I sell outside of the wheel, I am always trying to lock in profit by buying to close early. Now with the cash secured put, I wasn't able to do that because I knew that I was going to be assigned 300 shares because clearly the share price of SoFi was well below $5.50. I shouldn't say well below, right? But it was obviously below the $5.50. I didn't buy to close early because yeah, it sucks right now that I own 300 shares and my cost basis per share is $5.50. But guess what, guys? SoFi's going to bounce back up. I have essentially got in what is near the 52-week low. So could SoFi go a little bit lower? Yeah, absolutely. But let's go ahead and take a look at these 300 shares that I now own. And if we go out to the options chain, Now it's Saturday, so I'm not going to be able to show you what the premium would exactly be, but this is what I'm going to do on Monday morning. I'm going to get up when the opening bell rings, and I'm going to go to SoFi, and I'm going to look at selling a covered call, and my expiration is going to be May 12th. Now, my cost basis, as you guys see, is $5.50, so I'm never going to sell below that cost basis. I'm not going to choose, right, $5. I'm going to choose a strike price that would earn me profit if those shares were called away. Now, right now, I already have one contract written. And to kind of clarify, what happened with these 3 cash secured puts, one of them was assigned early. It was actually May 4th, Thursday evening. The person on the other end of the contract decided to exercise early, which means he was able to force me, since obviously the share price fell below $5.50, he was able to essentially say, no, you know what? I don't want to wait till expiration. I want Wayne to take ownership of these 100 shares today. It still means my cost basis is $5.50. Why did that person exercise early? I don't know. But it didn't matter to me because I was able to get assigned early. And guess what? I turned around on Friday and I sold a covered call and I made $6. Now that's tied to 100 shares. I now own an additional 200 shares. And you can see here, let's go back here to SoFi. I own a total of 300 shares. There you see it right there. This cost basis is still weird to me, so I don't know why it's not $5.50, but I'll take it. And you can see I currently have one contract open. So this contract expires next week. So that means come Monday, right, one contract counts for 100 shares. So I've got 2 more contracts that I am going to write. So let's get an idea about the amount of money in the form of premium that I can make. So I'm going to go ahead and sell a covered call. I like to sell weekly covered calls. So I'm not going to go out 2 weeks. I'm not going to go out 3 weeks. I'm going to go ahead and just go out 1 week in this course, or in this example, it's going to be 6 days. And right here, this is what I'm going to choose, the $5.50 strike price. That means if those shares were called away, I wouldn't earn anything in the form of share price appreciation, right? I own 100 shares for $5.50. I'm selling them for $5.50. So really my profits come down to what I make in the form of premium. And right now, I can make $7 per contract. Well, if I'm selling 2 contracts, because I own 200 more shares, that's going to put me about $14 I'm going to be able to make come Monday morning. Now you look at that and you say, well, Wayne, $14, big whoop. But look, I mean, over the last, month and a half since I began my SoFi endeavor in late March, I've been able to make $102. That's $102 in premium. That's not including, right, the share price appreciation that I've made. So let's go ahead and give you guys a rundown of how things are looking. And by the way, covered calls, cash secured puts, it's going to be my most profitable endeavor this year, right? You guys know that I'm investing in long-term growth stocks. You guys know that I love my dividend stocks. But the reality of it is I am going to make the most money this year by selling options. And right now, right, putting aside the wheel, right, just in covered calls and cash secured puts, again, not including the wheel, I've made about $13,000. If we look at just the stocks that I have been featuring in this wheel series, I'm at $2,100, right? Celsius, by far, my biggest winner, right? Almost $2,000 in premium that I've earned. Amazon was not the successful endeavor that I had hoped it had been. I am willing to go back to Amazon and sell cash secured puts, but right now Amazon is just starting to see a slow increase in share price. So for me, I don't want to own Amazon if it's above $100 per share price. I don't want to tie up that collateral when there are other quality stocks that I can run the wheel on. So until next week, right now, I'm going to only focus on Celsius and SoFi. And again, I realize, right, SoFi, small potatoes. Okay, Wayne, you've made $102, but you have to look at what my cost basis is right now. I do own 300 shares now, and those 300 shares are at $5.50. But guys, SoFi is going to go up. And if it doesn't, then I'm going to continue to sell covered calls until eventually my shares are called away. If we look at Celsius, it took how many weeks until my 100 shares were called away, right? It took quite a few weeks, but guess what? During that entire time, I made, right, nearly $2,200 in open premium, right? Now I netted obviously less than that, right? I netted what's going to be $1,700, but not bad to hold on to shares. And in the meantime, you're selling covered calls. So I love running the wheel. I love covered calls. I love generating cash flow. And imagine what I can do with this premium, right? Just as $2,100. I could buy another quality stock. I could reinvest in another wheel, right? The sky is the limit as to what you can do. So I appreciate you guys tuning in. This is a long one, right? Because SoFi just has so many different angles to play. I am excited as to how this is going to unfold next week. And I'm fairly positive the money that I have from Amazon, remember that Amazon collateral is in my bank. And so I'm just waiting to deploy that. I'm looking at some other cheaper stocks. You guys will have to be, of course, tuned in for the following wheel update. Also be on the lookout for some portfolio updates. I've got some great stuff coming your way. But you guys are fantastic. We'll see you on the next one.